Alright folks, in this video I'm going to be giving you my update for my Trading 212 and my Vanguard portfolios. We are sitting pretty good at the moment entering 2021. Just going to take a run through the stocks that I have, the things I've been buying, selling, dividends, all that kind of nice stuff people like to know about Trading 212. If you have any questions as ever, make sure you drop them below. Let's just get started. Of course, I'm David from prettypenny.club. I make videos to help you reach your financial goals with content on investing, passive income, frugal living, generally trying to make your money work harder for you. Subscribe if that sounds good to you. Just before we get started folks, it would be remiss of me not to wish everybody on this channel a very happy new year. I know it's just another day, and the folks who take that point of view are absolutely right. The world doesn't change just because you've kind of ticked over from a 2020 to 2021. But I think given the circumstances, everybody will be glad to see the back of 2020. And everybody is looking forward to a bit of a fresh start here. There's a lot of good news happening at the moment around the pandemic and vaccines and all that kind of thing, and I think everybody is feeling a little bit more optimistic that we're going to get back to being able to do all the things that we love doing. Socialising, meeting up, doing stuff when we want to, no lockdowns, holidays, all those good things. So with an optimistic spring in my step, let's just get on with this video. So in we go to Trading 212. And you can see there the portfolio is currently worth £6,222.18. It has been a good December for me. We've seen the portfolio rise from around about 4.5%, and we're going to finish December on 7.67%. So as ever, this is a reflection of the holdings that I have right now. It doesn't include cash outs, dividends, all that kind of stuff. So as usual, we'll have the return on investment at the end of this portion of the video. So that's not looking too bad. What I'll do first this month is go for dividends. Since so many people are interested in dividend investing, let's just see the kinds of dividends I've been getting this month. So looking down the dividends here, we've got Coca-Cola, £2.82, Persimmon the house builders, £6.30, Exxon Mobil, £4.99, Microsoft, 71p, Visa, 40p. Visa is an interesting one. I actually don't have this stock anymore, but since I did own the stock on the ex-dividend date, I was entitled to receive a dividend. 40p. It's not going to, well, I'll not be quitting my job, put it like that. So that's not bad. All in all, dividends this month came in at £15.22. Dividend stocks are the sort of things that people like to have because it brings in a regular income. It's like little bit like bank interest rate. So for as long as you hold the shares, and as long as your companies are continuing to pay dividends, then you're going to receive those as shareholders. 3 free shares of General Electric were all I had to show for free shares this month. I gave all those away in a giveaway last month. Congratulations once again to Vanguard Investing for winning those. I'm going to do another giveaway of some shape or form this month, so make sure you're subscribed, make sure you're hitting that like button. Make sure you're leaving some comments below so that I can get you into the hat for the next draw. So in terms of buying shares, I was back at it this month and very much continuing with my strategy of clean energy, computer games, and trying to future-proof my portfolio in Trading 212 as much as I possibly can. So I bought another 19.5 shares of the iShares electric vehicle ETF. I'm big on electric vehicles, talked about this before, so I increased my position there. I bought another 2 Unilever stocks. I bought another 15 National Grid stocks. I love National Grid. It's really boring. They pay a half decent dividend, and all being well, they're a fairly stable company. They pretty much provide most of the electricity for the UK, and they of course have branched into America. They've got projects going over across the big pond, so I like National Grid. 15 more shares while they were on a slight dip. I bought another 4 shares in Van X Vector Video Gaming ETF ESPO. I'm big on video games. I've talked about this one before. I really don't see this market slowing down either. Esports as an industry is very much in its infancy. It's really something I think has a big chance going forwards, and so I'm just starting to increase my position in that a little bit more. And that was it in terms of buys. In terms of sales, the only one I got rid of was Exxon Mobil. I had said that if this got close to green, I was going to get rid of it. It's paying a half decent dividend, but in terms of the traditional sort of energy stocks, I really am trying to phase those out in favour of clean energy. It's my own personal view. I don't necessarily think that oil is going to disappear overnight, but certainly I'm less confident in these incumbent providers here, particularly with the way demand for oil is. Quite happy to get rid of them and put my money into something else for the time being. So that's really it this month for Trading 212. I was very tempted to get in with Alibaba this month. the big Chinese e-commerce platform. Just couldn't do it. Just couldn't do it in the end. Certainly, Alibaba is starting to look very attractive to me as a buy, down from its highs of around $307 a touch, down to 232. If you fancy Alibaba to make its way through the storm here, this could be one to get in on. So I'll take a quick run through my holdings here and see how they're doing. So Amazon's the first one on the list here. What else is there to say about Amazon? Everybody knows what they're at. The big shop they have, cloud computing services, getting involved in space, automated driving cars, have fingers in every kind of pie. It's the kind of company I like to invest in. Avast is a cybersecurity company. They make AVG as the antivirus. It's probably the biggest thing they're most well known for. I've started to increase my holdings in that up to 76 shares now, and they are 2.11% front, as you can see. Coca-Cola, I love Coca-Cola, not particularly as the drink, but as the business. They're not going anywhere. This is a really interesting one to me though, because you can see there I've actually gained 18.93% and lost nearly 10% Forex. Forex is part and parcel of investing in foreign shares, so if you can't hack that, don't bother. Stick with your own country's shares and things like that, but Coca-Cola, too good for me to ignore, I'm afraid. GlaxoSmithKline, on a wee bit of a downer at the moment. I invested on a dip, a little bit more money there. They have continued to dip a little bit more, so I'm not sure whether or not I'll get more in here, because I already have 450 quid there already invested. That's probably plenty for now, but keep an eye on it. iShares electric vehicles, talked about that. I'm big on electric vehicles and clean energy, and there you are, just below it, iShares Global Clean Energy ETF is on an absolute flyer for me, and as ever, I wish I'd bought more. But look, for every share that you wish you'd bought more of, there's bound to be some that you wish you'd bought less, and I've certainly got one or two of those. So this is why we try to keep it nice and diverse. But clean energy, it's the way forward, honestly. I just do not see any other future. Right now, clean energy is got a huge swell of momentum behind it with population as a whole, and I think there's a real appetite for it, so I'll continue to invest in these kinds of technologies. Legal in general is going nicely at 203 shares there, up 26%. Lloyd's has seen something of a recovery. We're down a bit since the last update, 10% or so behind. Now that we have Brexit and there's a bit of a certainty going forwards, it'll be interesting to see what the banking sector does. I might be tempted to dip for a few more shares there, but we'll see for now. Luckin Coffee, bit of a nemesis for me, is actually on the up. I don't really know what's going on there. I haven't paid much attention. Every month I keep saying I'm going to find out what's going on, but I haven't yet. The shares are up ever so slightly from the last update, so we're minus 73.55% now on that one. Yikes. Microsoft continuing to grow. National Grid we've talked about. It always hovers around the 5% up and down either sort of way. That one's mostly for dividends. Maybe we'll see a little bit more growth as the country hopefully recovers from this virus and everybody gets back to work in offices and things like that. There might be a bit more demand for electricity, but for now we're just sitting at 2.66% behind. Not a big deal. Persimmon house builders still waiting for this housing infrastructure projects to start that Big Boris has been promising us all, and when it does, I think that Persimmon could well get a piece of that action. So happy to hold on to that. Renewables Infrastructure are another clean energy company, just a couple of percent behind there at the moment. Unilever, a couple of percent in front, and Van Eck Vectors video gaming ETF, 10% in front since I started taking it on. So happy with that. Overall, £6,222.18p in that account. Let's just see what the ROI is looking like. The return on investment for Trading 212 is the one that's most interesting to me. It basically represents what kind of profit I've made from the amount of money that I have put in. So we're taking dividends in the account, we're taking free shares in the account, all the affiliate links, buys and sells, everything to do with that Trading 212 account rolled up into a nice little ball and thrown at you. So we've invested £5,017. We have received £331 in free shares, not including the ones that I gave away. So those are £331 in my account. We've got around £90 in dividends. Overall, the account on the 1st of January is worth £6,222, which represents a paper gain of around 24%. I'm obviously delighted with that. This account's only been going since about January of this year, so we're not even a year in, and we've got 24% back. It just goes to show what consistent investing can do for you. I started this account in January. We've been through this serious March dip. We came back out the other side and we're still looking pretty strong. So 24%, who knows what 2021 will bring. I won't be changing my strategy. It'll be consistent investing along the way, and hopefully we're going to continue to see gains like this. I would love to know what your investing strategies are, and what kind of gains you're expecting to see in 2021. Maybe you're not expecting to see any gains at all. Maybe you're expecting a bit of a reversal. I'd love to hear about it. Let's get some conversations going. Leave your comments down below. Alright, so here we are in my Vanguard Investor. You can see portfolio is now sitting at £13,406 with a return of 13.96%. That's pretty good, I would have to say. I'm pretty pleased with that overall. Let's have a quick click on that. This is my ISA, of course, so all the gains in here are tax-free. If we click on the investments here, we can see the weightings and how everything's looking. So everything is in the green at this stage. That's nice to see. It really doesn't matter. I mean, at the end of the day, it's the bottom line that matters, and even that doesn't really make much difference in the short term. As long as we can see, that graph continuing to rise on a fairly stable sort of trajectory, I'm going to be pretty happy with that. Of course, there's going to be peaks and troughs. There's going to be crashes. That's all just part of buying the ticket when you invest in the stock market. But 13.96% is a pretty good return. So the other thing I wanted to point out is you can see here that this cash balance is actually starting to creep up. I haven't actually deposited any money in quite some time, but this is the result of dividends being paid out of the other index funds. So index investing is good for growth investors and for dividend investors. You get all those benefits. Any companies in those parcels, if you like, are still paying their dividends. You still get those. So I have £100 here, and what I'm basically going to do is reinvest that into one more unit of the emerging markets and one more unit of the all-world high dividend yield. So we'll just ask for the next trading point. That keeps it free, and whether I buy in right now or the next trading point really doesn't matter a huge deal to me. It's in there for the long term, so we'll keep the costs down. So the all-world high dividend yield is roughly around £41.45p per unit at this point in time. So Vanguard only lets you deal in whole units. You can't buy fractional shares. So we'll attribute £45 to this one to make sure that I get in there. And for the emerging markets, FTSE Emerging Markets, VFEM, that's going at around about £50.43. So we'll say 55, and we'll make sure that I get one unit of each. So I just click next. So those are the fees. Here's what we're asking for. Nothing new there to me. Payment, and I want to use my available cash. Confirm, submit, and we get confirmation that that is going to be paid. And that's how we reinvest dividends in Vanguard. So just to go back over that, £13,406 representing round about, well, very close to 14%. That's pretty good for the end of the year. Hopefully this continues to grow in 2021. So that's it for this video, folks. I hope you've enjoyed it. If you have enjoyed it, got some value from it, please leave a like. It will help the channel immensely. And if you like this sort of content and you're not already subscribed, make sure you do hit that subscribe button, notification bell, leave a comment, all that good stuff. Thank you very much for watching, folks. We'll see you in the next one.